And so if you're having issues with your system was working in one market and now this market conditions changed, what I would advise is that you need to go back and evaluate what's wrong with your system. Why is it not working? And see if it's possible to adapt, or if maybe your system is only good in an uptrending market.
Welcome to another episode of Tradervue Conversations, a podcast done with real traders sharing their knowledge and experiences. I'm your host, Richard Dalder, and I hope you enjoyed this conversation. Hello, Brent. Welcome to the first edition of Tradervue Conversations. We're happy to have you here. How are you? How's it going?
I'm great, Richard. Thanks for having me on.
Good to know. I'm happy to hear that. Let's kick it off. So if you could tell us a little bit more about yourself, how did you start trading and what markets do you currently trade?
Sure. Start off with what I trade right now. I currently trade equity futures, specifically the NASDAQ and the S&P 500 futures contracts. I will also dabble in some fixed income stuff and oil very mildly, but mostly equity futures. And I also will trade some stocks, but my main bread and butter is equity futures. Other question was how I got started. Back when I was in high school, my father had kind of a light interest in trading commodities. And he would get this. So this is a long time ago before anybody had computers at home. And he would get this gigantic Knight Ridder publication. It had every single commodity in the chart in it. I don't know, it's probably like a 14 by 9-inch book. It was a big magazine. Anyway, he had it sitting on the counter one day and I asked him, what was it? And he kind of explained to me what commodities were and what these charts were all about and how you were just trying to predict the price of where they're going. I just became fascinated with it. And so we kind of started doing a couple trades. I think my first trade was in coffee, and coffee was in a major downtrend. And I thought, well, this must be the bottom. Surely this isn't the low. Of course, it kept going lower and I lost money on that. And we tried a cocoa trade and I lost money on that one as well. And I just became hooked and I was fascinated with the commodity markets and the charting. And I started reading as many technical analysis books as I could and how to improve your trading. And then when I graduated from college, I moved up to Chicago and started on the floor of the Mercantile Exchange in the Eurodollar pit and just kind of started there and still trading.
All right, that's interesting. And so just to get a little bit more context, how old were you when you were kind of sharing this type of information with your father before?
Like 14.
Wow. Okay, yeah. That's interesting. So you were still at college at that time?
Yeah, I was in high school. I think I was a freshman in high school.
Wow. And so that's how basically your career started.
Yeah, that's how I became interested in it and just fascinated by it. And when I went to college, it wasn't to become a trader. It was to become something else. But I couldn't stop following it. And I said, well, I'm going to give it a shot when I graduate.
Wow, nice. And so walk us through a little bit about and like a little bit through your first year when you started trading or doing some active trading. How did it go? Maybe what lessons you got very early during your career? Can you tell us a little bit more about that?
Sure. So I started on the floor and I was moved over to the Eurodollar options pit, but we had an overnight book that we'd watch, and it was in the beginning days of Globex, and it used to be it was like a green and black screen, the old monitors, and so it was fairly new, and we would make these markets for options positions overnight. But it was in 1998, and it was a big Asian market crisis, and so the equity futures were moving a lot overnight, and you could kind of follow the S&P futures when they were moving with the Hang Seng and the Tokyo indexes. And I just started trading that a little bit and getting involved with the futures there. What I didn't have was good risk management. So there would be these huge swings on my P&L from, just trading small futures. And I forgot, that was the question, right? Was how did I first start trading? Those are my first first real trades. And then I eventually went down to the Eurodollar options pit and traded with our options group. But I was in love with trading on the computer. So I didn't trade in the pit very long, maybe a year, and then went right back up to trade on the computer off the floor.
Yeah, I mean, well, thank you for that. More information about your background. I think it's really interesting. So from that, from where you started to actively trade, how long did it take you to become like consistently profitable?
So there was a lot of movement back then in 1998, 1999. That was when like the dot-com bubble was going. So there was a trade that I had figured out, and I became profitable in my first year. But that's only because the markets were advantageous for that. And I was on the computer and I could follow the NASDAQ and was able to get S&P's trades done while I was watching that. So I had kind of an advantage, but that quickly evaporated. And then in like the next 3 years were not great. They were like kind of up and down. So I would say until I was consistently profitable, it wasn't until probably 2003.
Okay, so it took you about so you had a good run because of the market conditions, and then you have like a couple of years kind of struggling as a trader, and then you kind of everything started to click, or I'm guessing you've had some aha moments in which everything kind of started to come together for you as a trader. Is that correct?
Yeah. So there was kind of a transformation in who I was as a trader.
Mm-hmm.
And I had blown out of one firm and went to another one and blew out there. And then I was kind of at a low point in my career where I was like, I'd had this advantage right when I first started, and it wasn't there anymore. And I was still trying to figure out who I was and how I traded. And then the aha moment was more like when I learned how to take responsibility for all my trades and how to reflect on all the decisions I made during the day and evaluate them. Because for a long time it was just it was a crappy day and didn't really think about
Yeah.
the trading too much and analyze it.
Okay. So walk us through a little bit. Walk us a little bit through what type of approach or what type of trading were you doing during those good market conditions?
So one of the big advantages I had was that being on the computer, I could execute pretty quickly, and I had noticed that the market would move a lot on economic numbers, whether it was CPI or unemployment, and so I had an edge there, and I was able to trade off the computer in the very early 2000s and able to catch some edge on numbers when they would miss big. And then during the day, I was able to follow the NASDAQ and kind of when it would spike up, I was able to catch on to the S&P, and I was still like learning about levels and how they worked, but that was kind of my advantage then.
Okay, that's really interesting.
That's not necessarily how I trade still, but
Yeah, which actually leads me to my next question. Like, as of now, how would you best describe your edge?
I would classify my edge as one is experience. Like I've been trading for over 20 years. And so I can recognize a lot of setups. But the one thing that I really like to do is analyze market levels. And I would say my edge is just my approach and how I think about the market. I think it's kind of unique, but maybe I wouldn't say it's arrogant, but that's just, I feel like my edge is my thought process and how I evaluate the markets.
Okay, very interesting. And so you mentioned risk management. Like at the beginning, you were kind of struggling with risk management, and so you had like the swings in equity or P&L. Can you walk us through the process that actually, or maybe that aha moment in which you started to kind of connect the dots and make sure that risk management didn't or was not a problem anymore? Like, how did you actually tackle that? First of all, how you identified that was kind of like a problem, and then what do you do in order to kind of fix it or correct it?
So it's an interesting question because it wasn't something I came to on my own. I had to have somebody teach it to me. I had just finished blowing out of my other firm, and I had another friend who worked at another proprietary firm, and he said, you should come over here and trade. There's a great group of traders and the owner's fantastic. And I was like, all right, I'm going to give it one last shot. Let's see if I can really make this thing work as a trader. And I sat down with the owner and he kind of explained their approach. And he had a bunch of like tools and groups that we would meet with to teach us about how we would handle our losses. And he would put specific stops on. Before, I had not really traded with anybody that would stop me at a P&L level for the day. I just kind of like have to do that on my own. But it was a hard stop during the day. And if you wanted to get more rope to trade with, you had to talk to him and explain what your strategy was going to be for the rest of the day and how you would control your risk with that. So it was more like a person and a coaching session that was the aha moment. It wasn't something I came to on my own. I wish it was, but it wasn't.
Okay, so and tell us a little bit more about like apart from your edge, like your approach to the markets, like what things do you combine in order to trade? Like what do you have, for example, in your charts? What things do you look at in terms of maybe fundamentals or news or events?
Sure.
Or like kind of the thought process or the preparation before actually putting a trade in, and like how does it look? How does a trade look for you?
Sure. No, that's a great question. So the biggest part is the preparation in the morning, deciding what could possibly move the market today, whether it is FOMC meeting, some kind of economic report. And then it's all about intermarket relationships, right? Because it's not just the stock market. And if you only look at just the stock market, you're going to not always see everything clearly because there's outside things that affect each market. So maybe it's oil is affecting the market, or maybe it's fixed income is affecting the market today. So it's kind of like looking over the whole landscape and deciding what's important today. And it changes every day. You never really know sometimes, since things might pop out of the blue. So I prepare myself by reviewing all the different markets and reviewing whatever news came out overnight and what news events might be happening during the day, right? And so then I prepare my ideas of, like, when you say technicals, well, I'm looking at like levels that other people would be looking at. Not necessarily I'm trading off of them, but I like to know what everybody's looking at. So those are like major moving averages or Fibonacci retracements or trend lines. And when I'm setting up a trade, I'm looking, the one thing I coach traders as well as being a trader. And one thing I tell them is you have to have an opinion on the market. You can't, if you're going to make a trade, you can't just trade it because there's, oh, well, here's a trend line, I should buy it on the trend line, and that's what they say. Well, you have to have a reason for why you want to be bullish. And it shouldn't just be one technical indicator. There should be a whole market thought that says this is going up and this technical is going to be used as my entry point for it. Does that make sense?
Yeah, definitely. So just to make sure that I capture the whole idea. So you're combining what could be like a catalyst, the news, an event. You're actually preparing in advance for that and actually creating like a, you can call it like a bias before you know, getting involved in any trade or any position. And then you're also looking at the charts to kind of combine the two of them and actually executing based on, you know, timing for like technicals for timing, and then news, events, and knowing what's happening in order to choose like a bias or have like a bias.
Exactly. You have to have some sort of, I think it's important to have a bias. You have to have an opinion if you're going to get into a trade, right? And so where you get that opinion can be from multiple different reasons, multiple different sources. Maybe it was Netflix had earnings yesterday and they were terrible. So what will that do to the market? You know, those kind of things.
That's really interesting. And so I was okay. So let's talk about a little bit about the current market conditions. You know, in the Twitter sphere, if you will, and also
Right.
I also have a couple traders, a friend of mine's, and so everybody is kind of agreeing that in the sense that market conditions have changed significantly from 2020, you know, like post-pandemic, post QE and all the monetary policies. And so what I'm trying to say is that market conditions have changed significantly since 2020. And so what's your take on how to adapt to, current market conditions and what to do when your strategy kind of goes out of style?
So that's another great question. I would say that what I say to everybody that I coach is that risk management is your most important tool. And if you don't have that, then you might end up not being a trader anymore, right? And so if you're having issues with your system was working in one market and now this market conditions changed, what I would advise is that you need to go back and evaluate what's wrong with your system. Why is it not working? And see if it's possible to adapt, or if maybe your system is only good in an uptrending market.
Okay, that makes a lot of sense. And when it comes to risk management, like tell us a little bit more about how you manage your risk with your current, strategy or your edge, like a little bit of what happens behind the scenes in terms of risk management.
Right, sure. So it's when I talk about risk management, it's not just monetary, right? Like saving your money management's obviously very, very important, because if you lose too much, you're not going to be, everybody has a point during the day where if you're down this much money, you're probably not going to get back to positive. And everybody watches their P&L to a certain extent while you're trading, right? It's hard not to. And so when you get to a certain point, it ends up not being about making money, making profitable, good decisions. It becomes about, well, I got to make back this money I just lost today. So I find a spot, and I know what my spot is, and I say, well, mathematic or statistically speaking, I'm not going to recover from this amount if I lose this amount today. The odds of me coming back to zero or even coming halfway back are very small. So that's a shut-off point for me. But that's the money management technique. But the other thing that when I talk about risk management to people that I work with, is that it's also about keeping your mental game in focus, right? And you want to make sure that you're sharp and that the decisions you're making are also very smart. And if you have too many bad decisions in a row, regardless of what the money is, you can start to break down mentally. So it's about keeping your mental awareness and your mental focus sharp and keeping your money intact. So risk management on both sides,
Yeah, I've heard that from a couple of traders, and how not only they protect the financial capital, but they also protect their mental capital.
Mm-hmm.
Like they want to make sure that when the current market conditions are maybe not the best for them, like in for their strategy or for their approach, you want to make sure that they're minimizing maybe risk, and also minimizing like mental capital in order for them to be in the kind of sharper state or in their best state of mind in order to push it when market conditions are good. And so I was thinking about earlier you mentioned that part of your edge was your experience. And so tell us a little bit more, like maybe I'm getting a little bit more to the psychological aspect, but tell me a little bit more of when it comes to your experience, like what is specifically from your experience would you describe as your edge? Like how does that express in your trading currently?
Sure. So it kind of revolves right back to risk management, but like I've seen multiple instances when I've been involved in trades where things went so much farther than I ever thought they could. Right. And sometimes you get in a trade like, oh yeah, this is past my stop, but there's no way it's going to keep going further. It should come back. But my experience that I've seen is like, oh, sometimes it just keeps going and takes you way farther past your breaking point than you ever imagined. And so that's one thing. The other thing is like pattern recognition and seeing relationships and how markets work together, and how how one market can cause another one to move, even though in previous days it hadn't. So just kind of, it's that experience of knowing how relationships work and how markets work off of each other.
Okay, interesting. And so let's get a little bit into the trader mindset. So what do you do in a daily basis or weekly basis or on a constant basis in order to improve as a trader?
So another great question. The biggest thing I can say is to be informed and to be prepared and to read all of your information and to have a setup in mind. And so one of the things I do is I coach other traders. And so I found that this kind of keeps me grounded and it helps me understand what other people are seeing. And as I'm working through their problems with them, it kind of helps me stay on my toes to make sure that I'm continually doing the right thing. So I found that that's been a big help to me. But for somebody who's not coaching other traders or being coached, I think that it's important to know what you're expecting out of the market each day
Mm-hmm.
and to be prepared to not trade, right?
Mm-hmm.
But the other thing is sorry, I kind of got off on a track there, but uh is reviewing your trades every day is super important, and to constantly be self-critical and to understand what you're doing right and what you're doing wrong.
Yeah, so that's a really interesting point, reviewing your trades. Can you tell us a little bit more about how you go about that? Do you have like a system in order to review your trades? Like what exactly it's important for you when reviewing your trades? Like, is it the whole execution? Is it how you manage the risk and then trade? Is it maybe the catalyst or the news behind? Like, walk us through maybe like how does the process looks like when reviewing your trades, if possible?
Sure. So what I like to do is at the end of the day is look at my trades, and then I like to manually plot them instead of, I know most software you can just have the computer plot them.
Mm-hmm.
But when I very first started doing this 20 years ago, I found like the actual writing down the entry points on the, just printing out a chart and writing down the points really helped me like digest the trade that I did and understand my thought process when I made it. So I will look at my entry points, like you said, and try to figure out what I was thinking and if the trade worked out, to also evaluate my exits to see if I stuck to what my original plan was. Because if you're going to get into a trade, you should have two exits already in mind. It's not just get in because I think it's going up. It's get in because I think it's going up to this level up here. And if this doesn't go, if it goes down, this isn't the point where I know I'm wrong. So I try to look at that and evaluate, did I stick to my exit strategy as well?
Okay, really interesting. And so one thing I kind of I just remembered that I wanted to ask you earlier. It's about the time frame in which you trade. Are you
Mhm.
like trading in the like shorter time frames or like longer time frames? Are you more of like are you more a selective type of trader, or are you more like a grinder? You know, like scalping the markets like um that detail regarding your approach, can you tell us a little bit more about that and maybe kind of what would you suggest to those traders that want to do a similar approach?
Sure. So I've never been a scalper. That's not really my thing. I know that I know a lot of people who are very successful at it. That just doesn't fit with my style and my approach to the market. But I would say I probably have between 5 to 10 real trades in a day. So I would say my time frame can be anywhere from a couple minutes to a couple hours. But I would say most trades fall within like the 15-minute range.
Okay.
A minute in and out within 15 minutes.
Okay, interesting. So what other things, and this actually goes back to to kind of the trader mindset, what other things you do out of the screen in order to have like a good mindset, like what things are you doing in order to make sure that you're in your sharper state and that actually bleeds positively into your trading?
hmm So I think exercise is really important. So I try to exercise before the market opens, but if I don't, then I will try to do it sometime in the middle of the day when I feel like it's slow, because I feel like that's a good energy and a good release of just so it's your mind can kind of zone out a little bit, right?
Definitely. And so let's say, for example, then I'm a trader and I want to get involved, into the markets. I'm new, 100% like a beginner, And
Uh-huh.
what would you tell a new aspiring trader, like things that you would like to have heard before starting trading? Like what piece of advice could give the upcoming traders?
Right. Okay. Yeah, that's a good one. I would say that you have to keep your expectations low, and that you have to emotionally be prepared for major swings up and down, and that it takes a lot of time. And I wish somebody had told me that you should maybe practice on a simulator before I lost a bunch of money. Um, but most of all, the risk management is so key, both the mental capital and the actual capital, and figure out a good strategy to always stay in a positive mindset.
Definitely. And so would you agree, like you mentioning the simulator and risk management? I've heard before, and I also have read before that at least in the few, like in the first couple of years, the first aim should be survival, like actually staying enough in the game in order to see like different market conditions and kind of
Mhm.
identify who you are as a trader, and also what your edge could be. Would you
Right.
agree with that? And also, what could you like? What's your take on that?
100%. I think that that should be the first focus for your first couple years. Absolutely. Like, just try to survive. Try not to make any, you know, career-ending mistakes. Just stay in the game. If you stay in the game and you're still there after a few years, you probably are going to be there for the rest of your life trading, right? It's that washout part, right? What was the second part of your question?
No, I mean, yeah, it's yeah. Just wanted to hear your take on that, like on survival, and yeah, and also that during that survival period where you want to do it, so identify who you are as a
Oh,
trader.
yes. You
Hmm.
need to come up with a strategy that's yours and that you believe in. Like, using somebody else's strategy is
Hmm.
a recipe for disaster. It doesn't mean you can't take somebody's strategy and fine tune it for yourself,
Hmm.
but you need to have confidence in every one of your trades, but also be willing to be wrong. But you have to have confidence. And the only way you get that is if you do your own homework and you have
Hmm.
your own strategy. And it can be a combination of other people's stuff, but you have to come up with your own. And when you have your own, you'll have confidence to make the trades, and
Hmm.
you'll have the confidence to adjust it.
Yeah, I do agree. I mean, it sounds like this is kind of like a business in which you get like bits and pieces from everybody and kind of make it your
Mhm.
own. Um,
Absolutely.
and
It's
that's a
kind of an
super.
art, right?
What's that?
Kind of an art form.
Yeah, for sure. Yeah, I do agree. And so that's a super abstract topic and subject that I've seen kind of discussions around that, like finding your edge and also knowing yourself, kind of your personality and your strengths and weaknesses. What's your take on, like, how do you actually go about finding edge and also getting to know yourself as a trader? Like, for example, how do you come to these conclusions, like, hey, I might be a swing trader instead of a scalper, or maybe I'm more like a deep thinker instead of fast thinker, and I should be getting deeper into things instead of just executing fast. Like, that's a little bit abstract, but I would like to know what are your thoughts on that, and yeah, if you can share a little bit more
Yeah.
about that.
So that's not something that anybody can really answer before you start trading. It's kind of like, well, what kind of painter are you going to be? And you just kind of figure out what kind of like speaks to you, and what
Hmm.
you feel like you're successful with, and what makes you feel like you're going to make money.
Hmm.
And you know and you'll find some people's the market will adapt to your personality, and you'll find the way of trading that is best suited to your personality. If you're like high frequency, like I need to be constantly involved, well, then chances are you'll start to just automatically gravitate towards a strategy that allows you to have a lot of action. If somebody is a little bit more reserved and patient, you're probably going to be a little bit of a longer term trader and be more willing to sit back and have a strategy that allows you to be patient and make less trades. I think it just, your personality will automatically kind of navigate you towards the type of trader you want to be.
Yeah, definitely. It kind of reminds me. I've had some conversations with Brad. And by the way, for those of you listening, watching, so Brad is a futures trader also, from which we had an interview before, and he actually referred you, Brent. And so I've had
Thank you,
some
Brent.
I've had some conversations with Brad around like like keeping an eye in how what things feels right for you. For example,
Mhm.
if you're like, I remember sharing, I was getting a little bit more into understanding kind of the fundamentals behind the companies, understanding revenues and earnings per share in companies and how they behave, and understanding those growth stocks that all of the sudden kind of gave like a surprise to the whole market. And so that was something that actually I felt like it connected with me. And so what I'm trying to say is that he always was he was always pointing out to like check how it feels. And it's not hype. It's like kind of there's some things that you're naturally going to gravitate towards, so because it just kind of goes with your personality. That's what I'm trying to think. And I myself consider as a deep thinker, and it kind of made sense for me to be looking at that type of stuff. So I just wanted
Absolutely.
I just wanted to add that there. And yeah, I mean, if you can yeah, what thoughts do you have about that?
I mean, that totally makes sense. I talked to Brad quite a bit. He and I started at a firm 20 years ago, and have kept in touch and talk very regularly still today. Always about trading and other life things. But I agree, your personality and what you feel speaks to you is really important, and you have to listen to what makes you comfortable as a trader, right? Because as soon as you become uncomfortable and are filled with self-doubt, you will flinch.
Mm-hmm.
Mhm.
Yeah, I do agree. So Brent, we're starting to run a little bit out of time. So what word of advice do you have for developing traders, or those traders that are having like a hard time in this current market conditions?
Sure. Don't be scared to adjust your system and to play with it to make it work, but constantly be self-evaluating and evaluating why things aren't working, instead of just saying, "Oh, well, it's a bad market." It's not, somebody's making money, so I encourage the new traders to just take a step back and evaluate exactly what they're doing and take time to do some review. I think that's the most important thing you can do as a trader.
Awesome. Yeah, I do agree. And actually, I wanted to ask you a question about that. So how do you feel about, like, let's say for example, an intermediate trader, a developing trader, found some edge, was doing good with a strategy during good market conditions, which was
Mhm.
2020, 2020, half of 2021. Um, and so all of the sudden, it's not able to, he's struggling, which I'm pretty sure it's the case for a lot of developing traders after the
Sure.
pandemic. Um, how do you feel about looking into other type of approaches, or actually learning new skills, or maybe like approaching the market in other ways? Do you feel like that's actually getting, like, what's your thought on actually getting into new skills versus just focusing on your niche or focusing on one thing? Does that make sense?
Yeah, no, that totally makes sense, Richard. I would first caution, if you have a system or a style that you're using, before you just automatically throw it out and say, "Oh, it's not working," is to really dig deep and to understand why isn't it working. See what's changed that makes it not work, and to see if you can still modify that before you completely scrap it and try something new. Because if you're new and you've been working on your strategy for a long time, it's a lot of work to just immediately throw it out if it's already been working. There's nothing wrong with trying new things and trying to explore those, but I would always do it with small size as you're learning.
Mm-hmm. No, that makes a lot of sense. Yeah, and thank you, Brent. I mean, so where can listeners or viewers can hear or see more from you?
Sure. So Brad, the guy you just mentioned, Brad Jelinek, and I are starting a podcast where we talk about trading issues and things going on in the market. It's at
Mm-hmm.
tradinglifepodcast.com.
Yeah.
Check us out, or if you want to email me, I offer coaching to people who are interested in learning more. My
Mm-hmm.
email is brentnord@gmail.com.
Awesome. Sounds good. I'll make sure to put that in the show notes description. Um, and so, I mean, thank you, Brent. It's been a pleasure having you here, and we hope to have you next time.
Great. I love being here, Richard. It's great talking to you.
Thank you. Thank you for listening to another episode of Tradervue Conversations. If you really enjoyed our content, please support us by giving us a thumbs up, sharing, and subscribing.